All right. Good evening, everyone. You're welcome to Forex Empire YouTube channel. We are going to be doing reviews for our last week trading, and also we are going to look into the new week to see what we are going to be expecting and all that. All right. So we are going to start with DXY. From past couple of weeks, I've been bullish on I've been overall bullish on DXY. Reason that if you look at the weekly time frame, you see that we have a liquidity grab here at this zone. We have a liquidity grab at this zone, and then from that liquidity grab, we had an internal structure shift here, right here. See, right here we have this internal structure shift. Then we now have this external structure shift. If you look here, you see clearly that the candle that broke that structure, shifted the structure, closed full body above it. All right, closed full body above this high, and this is a swing high that gave birth to this liquidity purge down here. Okay, now when we have this, that means the market has declared intention that is about to go up. Okay, so right now, if you look at this zone, you see that we have an unmitigated order block that was just mitigated right now. And if you look here, you see that we are having series of wicks that is being thrown around here. So on the weekly time frame, the market has tested around 97.764 price level and rejected there like almost thrice. So now going down to the daily time frame. The daily time frame, we have, and also if you look, you'd see at this point we have this zone. We have this zone that the market actually tested from. So this is a higher time frame POI level. This is a key level that the market traded into. And when we had this liquidity grab here and structure shift, that is a clear indication that this market is about to turn around. All right. Now, turning around, if you are looking at it at the long term, this will be our first point to take profit, and then this other place will be our second point to take profit. This fair value gap at this premium level will be our second point to take profit. But then, moving on, let's just go to the daily time frame and see what we can see there. So on the daily time frame, you can see that the structure is beginning to get more clearer, and we are seeing the structure shift very well. We saw the internal that was taken, and here we have this order block that is at this zone. All right, we have this order block that was tested. They came back, reacted from it, went up, went into this volume imbalance right here. So this volume imbalance is a key level that the market actually tapped into. This was market opening last week. This Monday, Tuesday, Wednesday. This Monday, Tuesday, Wednesday, Thursday, Friday. So the market opened on Monday and went straight into that volume imbalance. All right. So going into the volume imbalance, we came back into this demand level where we have the order block that was mitigated, right? And now you see that we did not take out this low. So leaving this low behind and giving us this pin bar candle is an indication that this market is about to move up. Is an indication that the market is about to move up. So this pin bar is an indication that the market is about to move up. Then you need to understand something about liquidity. Liquidity is very high. We have a high level of liquidity at previous day highs, previous day lows, previous section high, previous section low, and we also have liquidity present as previous week high and low. Right. So now this is the daily candle. You can see that we actually traded into this Thursday low and we rejected from Thursday low. Now, when it comes to the rule of liquidity, once you have liquidity that is being grabbed from sell side, distribution will be at the buy side. Okay, so now the first target for DXY is 99.098. 99.098 levels. 99.098 levels. Okay. Now, there are some people who would be seeing otherwise, but this is what I'm actually seeing currently that price is doing right now. Okay. This is what I'm seeing right now. So I'm actually bullish on DXY. I'm bullish on the DXY. This is my first take profit. Then I'm now looking at this level to be tapped in. If you go to the monthly time frame, you see that we have something interesting. That's for people who trade CROT. You see that we are coming from this order block on the monthly time frame. We are coming from this particular order block here. All right. If we want to mark all of them. So this is a zone that we are actually coming from, and then taking this lower low to give us another lower low. Then we now had a higher high, right? We now had a higher high. So now we have this imbalance here, and this imbalance is called volume imbalance. This is volume imbalance. So within that volume imbalance zone, we also have a previous week low that was tested and rejected, right? Was tested and rejected, and then we have this POI level that price level is rejecting from. So the distribution that will be seeking on this particular DXY will be at this level, which is around 100.656 $100.656. Okay, so we'll keep an eye on DXY to see what it does. So right now, moving on to gold. Previous month closed with an engulfing, with a bearish engulfing, and the following month, which is the month of April, also closed bearish. April also closed bearish. So if you want to look at the structure on the weekly time frame, looking at the structure on the weekly time frame, we can start from present data. All right. So we have this low, and then we have this high. We also have this low here. Let's use this one. And then we'll have that high, and then this low, and then we'll have this high, we'll have this low. Then instead of getting a higher high, we didn't. We now had a lower high, and then we now had a lower low here. So it does mean that this is our lower high forming to give us another lower low. So by the rules of structure, we are anticipating that this low will be taken out. We're anticipating that this low will be taken out. And also, one of the things that you can see on this chart is that we are coming from this huge imbalance on the weekly time frame. You see how price came into the consequent encroachment of this fair value gap here, of this imbalance here. Price came to the 50%, closed above it, closed below it. So that's a clear sign that we are actually going down, right? We are actually going down. Because if you look at the weekly time frame, there's nothing showing you either a shift in market structure or change in state of delivery, or maybe there is a liquidity grab and we have a fair value gap that has formed to give us a bullish directional bias. There's nothing like that. Right now, the market is reacting off this bearish fair value gap. It's very, very obvious, visible to the blind, right? So now market reacting off of that. You see that previous week, we had this engulfing opening at the closing price of the bullish candle, and then closing beneath the opening price of the bullish candle. So last week we now had this bearish drop. So I'm expecting another bearish drop. All right, I'm expecting another bearish drop to the downside. Let's see what daily time frame has to give to us. Okay, cool. So on the daily, we also have a fair value gap on the daily time frame that the market tested into. Now, whenever you start having fair value gap in line with a particular direction, right, just know that those fair value gap is going to be used as POI levels to trade off from. So if you are bearish and you are seeing bearish sell side imbalance, buy side inefficiency, then you know that you are actually right with your bias, because you cannot be buying. If you look at this leg here, this retracement leg here, there is no fair value gap. The only fair value gap that we have is this one that is here that have been tested, this particular one here. So this one now have been mitigated, fully filled, mitigated, came back to, again, and then tapped into this other one. And now we are now having another what? Bearish fair value gap that's actually showing in line with the trend. You don't need to complicate it. Keep it super simple. So we have this fair value gap that's already formed in line with the bearish sentiment that I have from the weekly time frame. So you see that the market here actually closed with a pin bar. Now, if you want to be bullish on this market, I just believe that we are going to take out this other block. Until we take out this other block here, until we take out this last bullish candle that is responsible for this drive down, I'm bearish. Until we take it out, there's nothing that will make me to be looking for bullish sentiment, to be looking for bullish trade on gold. There's nothing that will make me to be looking for that. Now, you see that after we tested into that fair value gap and we rejected from it, you see that we grabbed liquidity from this previous day high, which is Thursday. The Thursday high, we grabbed liquidity and closed beneath. So I'm expecting that here will be our first line of take profit. Here will be the second, and then we'll now start having structure give us where the market wants to go, down to where we finally come to this zone, down to where we finally come to this level. So that's that. Then I want to show us okay, let's do for BTC. So right now BTC is on a bullish trend. The previous month closed with a bullish candle, which is this candle, and then you can see after tapping into this other block level, the market rejected from it. So rejecting from it, we now had this bullish candle coming. So now, what am I anticipating from Bitcoin? If you look, you would see that we have a sell structure that has already formed. Okay, but then we have tapped into a demand level. So now, if we want to look for our long-term sell, then there are places where we would really expect that the market should sell from, which is this other block is number one, and then number two is this fair value gap here. So these price levels are actually zones where I will be looking at the market to do what? To sell from, but it will take months, all right? It will take months for this to happen. It will take months for this to actually happen. So what are we looking at? This is where price is currently. So we are looking at trading Bitcoin back to the premium level before we start dropping. So this is more like a buy to sell market. It's more like a buy to sell market on the long run. It's going to take months. It's going to take months before this will play out. So I want you to just keep that in mind while we now look at what the lower time frame is actually doing. So you see that you can see that we have a structure shift here, which is indicating that we are what? We are bullish. We are bullish, right? So Bitcoin right now is actually bullish. So you don't have any business looking for bearish trades. You look for bearish trades, no, because it's not like the bearish markets, bearish trades will not play out. It will, but if you are more on the bullish side, you are actually going to make more money than any person that is selling. Now you can see this sell, this actually sold for some pips, while this one sold, while this one bought for a longer period of time. Okay, so looking for bullish markets in Bitcoin will actually be more profitable for you than the bearish market. So this was what happened last week. I've just started to review this pair. If you go to the 4 hour time frame, right, you see that we had this break of structure here. So having that break of structure, it leaves us with this origin, this other block, the other block that is responsible for that break of structure, this one, right? But then before it got to this place, the market was mitigated, right? The market came back, gave us that structure shift, right? Give us that structure shift, then came back to mitigate that other block there, right? So now, after mitigating this other block, okay, we are now left, which other block is unmitigated after we broke this structure here? Is this one right here. So you could see that immediately the market broke structure, right? We now entered into a range. The market started ranging. right? Now the market's ranging, which is your people that understand the power of three will understand what I'm about to say. We entered into accumulation, right? So from the accumulation, we now manipulated to the up side, we manipulated to the buy side, and then we dumped into this unmitigated 4-hour block levels, into this unmitigated order block on the 4 hours, which is serving as our demand, zone. So moving on to the lower time frame, this is how you would have caught all this buy here. Number one is that we have a higher time frame that was mitigated. Now there are some people who loves to enter aggressive entry, but I don't do that. What I do is I wait for the market to give me some sort of confirmation, right? So some sort of confirmation is that inside that higher time frame POI, I want to see something like this. I want to see the low, the high, the lower low, and then we now have a shift. All right. So now that shift, I want to see a pullback into either a fair value gap or an order block for me to continue buying. That is what I want to see on the lower time frame. Now, if I don't see that liquidity sweep, right? If I don't see that liquidity sweep on the lower time frame breaking a market structure, then I know that the market is actually still going down. So I need a high to be taken out. And if that high is being taken out, I need them to give me some sort of order block, a fair value gap that the market needs to come back to mitigate before we start going up. So now, if you look at what we have on this time frame, if you look at what we have here, you'll see that, remember, this is our H4 order block. This is our H4 order block that was mitigated. Now, see that we have these lows. This low was what was pushed, right? We have the market pushed through. You see how it came with a very long candle. This candle we call displacement candle, right? So now the displacement candle took out a lot of traders who are here, right? Those traders who has their stop loss here, who are actually buying, because you see that the market actually came into that zone, into that level, and acted as though it's buying. So this is more like engineering buy traders in this market. So what the market did was took liquidity from here, and then we had another shift. That is, this high now was now taken out. So immediately that this high got taken out, then I now knew, okay, we are about to keep climbing up. So now let's see if we can see anything on M15. So now after that, you see that we have this unmitigated order block here. We have that order block that the market, after giving us that clear intention and direction of what it was to do, the market did what? Came back. So we call this intention, correction, and then continuation for people who trade ICC, right? Your intention is when you have your market structure shift. So in this scenario, we had a market structure shift, which is the intention of the market, telling us, okay, right now I'm in this H4, this H4 POI. So the H4 POI will now serve as a support level. To do what? To buy. So for us to now confirm that this buy is ready, we need to have a high that is being taken out. We need to see a weak high that is being taken out. And that's exactly what happened at this zone. All right. So that's having that we took out that high. So where are we going to be seeing our order block? Where are we going to be seeing to enter the market from? You can even decide to use this last bullish candle to the downside, right? You can decide to use that, and you place your entry right there, and then your SL at point of invalidation. You know, one of the things that kills a lot of traders is their SL placement. If you can give your trade a little bit more of room to breathe, you are actually going to do very well on the long term. Okay, so now when the market has tagged you in, you see that we also came to this point and we took out this high with this displacement candle here. So that makes this order block, that makes it to be what? A reputable zone that the market needs to come and tag. And you saw how the market actually came, tapped in the first time, tapped in the second time, and then the third time before it actually started moving. Okay, so now if the market starts moving, what and where is your next point of target? Previous day high, previous day low. Remember, I told you that liquidities are at previous day high and previous day low. That is where you can find your liquidity. and that is exactly where Bitcoin actually went to. So you can actually get, just from this trade, 1:5. So if you are risking $100, you're actually going to be making about $500 on this trade. If you are risking 1,000, you're actually going to be making around 5,000. You're actually going to be making around $5,000 on this trade. Okay, so that is that. Then for this buy that happened, already we've established the fact that Bitcoin is bullish. All right. So having that at the back of our mind, we had another trade opportunity here. We had another trade opportunity at that zone. So moving on, you would see that immediately the market tapped into that zone, we now start having highs that we are taking out. Right now, this level was the level where I was looking at. Why? What is the reason why I was looking at that level? You can see that after taking out this previous high, here, the market needs to come back to mitigate an order block. Right? The market needs to come back to mitigate an order block. Now, this one has already been mitigated, but this one have not. So you can actually use this. Right? You use that order block as your entry level. Okay, but then you should know that this order block is an internal order block. The origin of this bullish move actually started from this, from this level here, this candle. This is where it started. So if you want to enter this trade, which I did, you put your stop loss at what? Point of invalidation. All right, put your stop loss at point of invalidation, and you see how the market actually came and smashed that listing profit, giving us 1:5. 1:5 risk to reward. So this right here is just the market that opened. That's why we're having that free fall. But don't be deceived by this free fall. The market is still actually very bullish. The market is very bullish. So looking for bullish signals will benefit you more than the bearish signals on Bitcoin. Okay, so let's analyze for gold. So for gold, I know that was last week that gold is bearish. Right? So gold being bearish, what are you looking at? Now, this is on a Friday, the market closed. Now, if you look closely, you'll see that we have liquidity grab. The market came into this level, took liquidity, and then broke structure here. It gave us that market structure shift. Okay, so giving us that market structure shift, what are we now looking at? We are looking at seeing that the market will do what? The market will come back to a premium level or supply level for us to start falling. Now, you need to notice something. Immediately the market came into that level, into that supply level, the market started giving series of lower highs and lower lows. Lower highs and lower lows. Let's look at M15. It's very important that you read the tape. Reading the tape means that you are trying to observe what is happening and what is going on in the market. All right. So you see that here we took out this order block. We took out that order block. Right. Now, after taking out that order block, we have this low that was taken out, right? So going into the London section or going into the New York section, this market has to retrace to somewhere, okay? So the market coming back to somewhere to pick up orders, we have the whole of this, all right? So this would have been a very perfect entry for you. So taking on that trade, your SL at point of what? Invalidation. Picking up that trade, you see that we went ahead to drop. Gold actually went ahead to drop for a total risk to reward of 1:11. 1:11. This is how we actually caught 26R on gold last week. Okay, let me remove this so it will not confuse you. So now, going on into Tuesday, because we already have a straight away trade, then you see that we had a fair value gap here, right? That minimum fair value gap, just that tiny one. And then we have that other block there. So this market actually came, tapped into that, and did what? Started selling. So that was just 1 to 2 hour. Okay, this is 1 to 2 hour. So now, the following day, you see that we have this other block here that was not mitigated. So you just stretch it out. Okay, so stretching it out, the market came there, broke structure to the downside. So breaking structure to the downside, what does it mean? It means that this market is no longer ready to go up, because at this point we are having a series of bullish candles. So the bullish candle is just the market coming back into a POI level. All right. So coming back into that POI level, we had a shift in structure. So from the shift in structure, the market came back again to supply of that level to do what? To sell. Okay, so we have this, we have that from that level. So now we also have something that is very interesting here. You see, we also broke structure to the downside. So breaking structure to the downside just means that the highs are actually strong and the lows are weak. Breaking structure to the upside, it means that what? The highs are weak and the lows are strong. Just put that at the back of your mind. Put it at the back of your mind. Okay. So what I said was that whenever you have the lows being taken out, it means that the highs are strong. And whenever the highs are being taken out, it means that the lows are strong. So in this scenario, right? In this scenario right here, you see that this low was taken out. Okay. So as this low was taken out, what do? We have this high, and then you place your limit order, your SL, and your target. Okay. Your target. Now, you see that after this happened, we now had a lower high that actually gave some pips, but then the market did what? The market came back to take out this high. So taking out this high now, what does it mean? It means that the lows are protected. Okay, the lows are protected. Just simple. You don't need to make it complicated. You don't need to complicate it at all. You don't need to complicate it. So now, as this high is being taken out, which other block is unmitigated in this leg? This is the closest one that is unmitigated, right? This is the closest one that is unmitigated. Okay, so now what do? You place your limit, and then you put your stop loss as point of invalidation. Okay, point of invalidation. So where is your target going to be? Your target is going to be at liquidity levels. You see, this was a previous day high, right? That's a previous day high. Or you can put it at somewhere, look at to the left. If you check to the left, you see that we have this fair value gap here. You see that fair value gap? This one was unmitigated. And that's exactly where they actually came and price reacted off from that place. Okay, now moving on. What do you have? We have a high that has been formed and we have a low. Now, instead of us having a higher high, we didn't. What did the market do? The market just came back, reacted from that, and give us a displacement. Giving us that displacement, we now had a fair value gap and an order block. Now, this order block becomes a high probability order block, right? It becomes a high probability order block. So your duty is to do what? To just mark it out. Mark it out. And once you mark it out, you see that, okay, to refine it, you go to M15. You see that we have on M15, we have this high, we have that high, we have this high. So you see on M15, we have a fair value gap plus this series of order block that was unmitigated. What do? You place your limit and put your TP at point of what? Invalidation. And now you target your take profit area. Now, for the take profit area, I'm actually targeting this level because there is one thing about the market. Once you have a zone that was broken, the market comes back to retest it before we either continue going up or we finally break it, right? We finally break it. So that is a breaker block. This is a breaker block, right? So you put your take profit at that level, put your take profit at that level. So you see that the market actually gave 1:4. 1:4. Now, did you see how the market reacted off from this breaker level? If you go down to the 4-hour time frame, you see that we have a very clean order block that the market came back to react from. So this one now you could just ignore the wick and just use from the opening to the closing of that candle. So you see that the markets actually do what? Reacted off of it. And now see, instead of taking the lows, because we are actually selling, instead of taking the lows, now we are now taking the highs. So that's an indication. The market will always show you what it wants to do before it finally does the obvious. It will give you clues, it will give you signs. All right, it will give you clues, it will give you signs. So your duty as a trader is to do what? To read what the market is actually doing at that point in time. You need to read what the market is doing at that point in time so that you decipher what it is about to do. Okay, so remember I told you that I am bearish on gold. The week just started, so we are going to be hunting for more sell setups. Okay, guys, that's how we are able to catch about 1 to 26 hours. If you see here, this one gave about 11, this one gave about 2, that's 13, this gave about 2, that's 15, this gave about 3, that's 18, this gave about 3, that's 21, and then this gave about what? 4. So that's 25. So let's just say approximately 1 to 26. That's exactly how we're able to catch this. Now, for you to gain mastery in trading, you just need to do what? You need to focus on a particular pair. You can choose like 2 pairs, right? Choose 2 pairs, focus on your trade, focus on your edge, and make sure you apply it. Make sure you execute it aggressively, right? Gather your data, because at the end of the day, you're in this market to make money. You're in this market to make your life better. You're not here to answer technical analyst. You are not here to answer technical analyst. If you have watched so far, you can make sure that you join our community, our free community. You click on our free community. If you just go to Seller and type seller.com/m/Forex Empire, you see where you can join our free community. You can join our free community. Then if you want to join my inner circle, you can actually join my inner circle. Then if you want to book a clarity one-on-one call, you can book a one-on-one call with me. For those who are interested in stock investments, long-term investments, and we'll have ABC of stock and investing. We'll have ABC of stocks and investing. That is like this a recent product that we just had. And then if you want mentorship, you can actually click here to get a private mentorship. All right. I don't sell a course. I just do mentorship. I just mentor you on how you can be a profitable trader. Right. I mentor you on how you can be a profitable trader. Then this is a simple SMC entry criteria. If you want to learn how I enter the market, just to learn everything that I did here on gold, right? This SMC book is going to guide you. Is going to guide you on what to get, on how to do that. Okay, so you can actually click on the channel to get the book, right? See, identify market context and understand the bigger picture, secret behind market structure shift, how to spot valid order blocks, why imbalance, risk management, and all that, right? So that's what you're going to get. So thank you very much for listening. Thank you very much for listening. I'm going to see you on the next video. Bye-bye.